Hey everyone, welcome to the weekly review. This week I'll only do the market and mega caps, no individual names. So let's look at where we are. I'll go to 4 hours and turn on this one. This was the prediction since last week, and uh, this may have been this pullback. Don't know. Market is pretty fragile here, in my opinion. I mean, not that it will correct necessarily, but that it's at risk of a major correction any day now. Uh, it's all about the how impulsive it will be when it goes down, but basically it can happen any day without any trigger. It's just about positioning. If it has a catalyst, we have a bunch of catalysts, potential catalysts this week. We have ISM services PMI tomorrow. We have ECB meeting. We have JOLTS, and on Friday NFP and employment rate. And next week we have a CPI. And most likely it's going to be a hot CPI, but the market might do a pullback faster. Initially, it might interpret uh, any economic weakness as a reason to cut yields, like it happened on Friday with because of NICB. Basically, we are following this yields path, and we might see it to fruition. This would be equivalent to a rally to around 520, most likely. Let's move it a bit to the right. So this might come to fruition if the economic data is bad. The economic data this week, not next week. If CPI comes in hot, the market will interpret it negatively. But let's say we have a very cold um, no, not an NFP, JOLTS, and unemployment is higher, and NFP is low. So basically, the job market is cooling, and this will make the market interpret the data as if, oh my God, look, the job market is detightening and the Fed has to cut to re-engage. So the same will happen with PMI today, with services PMI if it's a bad print. So this will make the drop continue. It might not go all the way here at 416. That probably requires CPI to also be hot, but or cold, sorry. But maybe we get a pullback to 4.36 on the 20-year, and then we start going higher. But this was the NICB scare. Anytime there's a reason for the market to be bearish, it interprets it as bullish and it kills yields because, oh my God, bad data. The Fed has to cut this time. And this is what's happening and why we got that rally on Friday. Aside from the rally on Friday, the whole month was not the month, the week was pretty uneventful, a flat sideways week. Okay, going back uh, to this, and I'll do on the 4 hour to keep the initial drawings. This might have been the pullback, but there's not a lot of room to go higher either. We hit the 2 standard deviation on the uh, AVWAP. We are outside Bollinger 2 on the daily, so not a lot of way to go up. How I think we can go up is just by hugging this trend line, like we go, or two ways. We either do a crazy push up and then we reverse down, or we just go sideways like plus zero point 0.2 every day for the next week or so. And that's why how we get to 520, not 420, sorry. But like I said, the risk is here. I would not long the market at this point for any reason, but it's too scary to short. So we need to wait to see how it reacts to an impulsive move down. Maybe we take some shorts towards the end of the week, or if we get a crazy push up in a single day, because these moves tend to end in a blow off type candle. Like for example, here, like we got, sorry, no, it's not visible. A gap up, move up, this gap down, supported, no, wait, what the fuck am I looking at? This is not what I wanted to see. I wanted to see this one. So September 2, and we go up, and then we have a gap up, blow off candle of plus 145, and then we correct. And this is the way we are now. This is the most one of the most similar situations. The other one being this one from 2018. And same kind of approach. We have one blow off move, and then we have a final blow off move, and then we start correcting. This is the type of candle we could see this. If we get this, we can consider a short. Other than that, no. We will wait for the slow grind up, and eventually we will get our shorts. Friday's candle kind of looks like that, but doesn't look like we will be correcting today. Maybe the market reacts to services PMI in a different way. But going back to what will happen, more or less staying with this path. Uh, Final target is a retag of this AVU up here. It's 469 right now, but as time goes by, it will go higher and higher. Maybe we hit it around 475 or something like that, depending on how quickly it happens. This will slowly grind up, and we will meet it somewhere higher, most likely, depending on when it happens. Like 475 if it happens by March OPEX, something like that. Okay, so I won't do any modifications, but the permutations are endless. Like I said, another move up, and then we have a corrective impulsive move most likely. Okay, now let's look at mega caps because this what mega caps do will determine what happens. And specifically, I am looking at Apple and Tesla. Apple broke the uptrend, which is bearish. Even let's say backtested it and got rejected. We are below the 200 moving average. We are actually below all the moving averages. We're having crossovers. If this doesn't get saved soon, we will get a 50 to 200 crossover. And Friday's candle was sort of bullish, sort of on good volume. We shall see if it follows through. I would expect it has another shot at the 200 MA. But if it gets rejected this time, all hell will break loose, and I think Apple starts a bigger correction, and we go as far away from the 200 MA as we were here. This was like once, let's say 157 to 196, so around 40. We will go $40 away from the 200 MA, which is 183, so around 140ish. Let's say something like this. Do we have support here? We do. We have the previous, not the previous all-time high, but this area here. So probably here. If the market starts correcting and Apple gets reached at the 200 MA again, I think it will do all this move. And eventually it will bounce, obviously. But my target would be like just below 150. Maybe 150 holds as it's a psychological level. Uh, and that's quite plausible. But I think if it gets another rejection at the 200 MA, it starts an impulsive move, and that will also bring the market down. This combined with Tesla, which this is an obvious bear flag, sorry. We have an impulsive move down. We finally fill the gap here, and now does Tesla have what it takes to actually break out and start going higher significantly? Doesn't seem that plausible to me. So I'm still in the bearish side on Tesla, and we'll move this here. Maybe it does another swing down. I think we see at a minimum a retest of the lows. At the maximum, we see 150. Not bullish on Tesla, in my opinion. Oh, look, the pre-market numbers just came in. Then Nvidia, Hard to talk about Nvidia from a TA perspective. Bearish divergence, but basically getting corrected, redressed, not corrected, getting redressed, and we technically have a breakout, uh, but we didn't really get a significant pullback. So I would say that this move is not yet done, and we will still get a bearish divergence, maybe something like this, if it continues going a bit higher, or it just stops here. We shall see. Uh, the market can keep going on fumes without Tesla and Apple and be like a low breath rally into semis until Nvidia goes to 970. This is the final target for Nvidia from the Fibonacci extension. Then we have Google. The Magnificent Seven are becoming the Magnificent Four. So the last one are Nvidia, Amazon, Microsoft, and Meta. Netflix is doing okay as well, but it wasn't the Mag 7 initially. Okay, so Google. Google is also approaching the 200 MA, lost the 100 and basically had a back test, sort of got rejected on Friday. I don't see it redressing before it hits the 200 MA, and it's not a long way to go. We shall see how it happens, but I wouldn't be long this until we get that at least the tag up to 200 MA. It's at 133, probably 135 by the time we hit it, and that's kind of it. Amazon, the prediction was a retest of the all-time high. We're almost there. Could hit it in how much is it percentage-wise? 5%. So another 2 days up, like 2-3% each day is enough, and we hit our target, and we should see a correction afterwards to get, this is the cup, to do a handle. Even if we get a sideways handle, I think it would go down to 160, 168 here. Microsoft, top of the channel here, and basically consolidating. Microsoft might stop being one of the Mag 7s as well. Maybe like this. Doesn't look ready for a breakout. Like if it breaks out, I think it will do a bit more consolidation. But a retest of this breakout level, actually the whole area, is more likely in my opinion. Meta is the most bullish one together with Nvidia. This one can still keep going, but I think this is the last leg of the rally. Netflix almost hitting the channel target. There is supply here. This is where the breakdown happened. And I'll remind you that when the market tops in a significant way, not all tickers start topping at the same time. For example, when the last major top happened, we had stuff like Netflix and Meta who started the correction ahead of the others. And this is happening now as well, but with different players. Meta started correcting in September, Netflix or topped out in September, Netflix topped out in November, sorry. Amazon topped out a lot sooner, I believe. No, in December, one of the last ones. No, November with Netflix. Google was one of the last ones. Nvidia was one of the last ones. Apple was the last one, I think. January. And this is happening now as well. We're seeing Tesla having topped out a lot sooner. Apple looks like it had topped out a lot sooner, and we're getting corrections in them. Google has topped out as well, and we're seeing them take the leadership going down. But while these are going down, the other ones are still going up. But they will top out as well relatively soon. The echo rebound will be pretty high. Like for example, if Nvidia corrects, let's say it goes to 960 and 70. When it corrects, it will go like 750 or something, and the rebound will be glorious. We maybe go a retest of the high or go even higher. So this kind of moves are relatively profitable to, not relatively, very profitable to play out. Uh, and the example is like Apple. We had the top out in January, it went down, huge bounce, went down again, huge bounce again. Expect this type of moves when we top out and everything else as well. And for XOM, we have a breakout here. I think you guys saw my post on oil relative to the market, and it's looking like oil will have a breakout. The horizontal one happened. This is sorry. We are about above 80. Might see one last pullback here, as low as 75, but I think this goes higher, and we have a retest of this high area here between 93 and 95 quickly. This is not quickly. Based on that overlay, it would supposed what is supposed to happen by April 15th. So oil will go exponential. If this actually materializes, what do you think will happen to CPI? So this is a move that will put a coffin on this, a nail in the coffin of this rally, and finally give us the correction. But for now, it's still scary as fuck to short. I don't recommend doing anything in size. Of course, you can take shorts when the market gets to various levels, but don't go crazy yet. When the top happens and the correction starts, we'll probably have plenty of time to get into positions and ride the move down. But for now, play it safe. There's still longs to play out. Uh, my favorite one is Lyft. Did this one gap up or something? Yeah, it gapped up. Posted the last week. Now we have a major gap up from 1645 to 1727. Think this one moves quickly and as high as 2223. Okay, that's it for this week. Have a good one. Bye bye.